What is going on in the Lakewood Ranch real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group. Each and every month, bring you the Lakewood Ranch market in a minute. Minutes. We're going to use more than a minute. We're going to dissect the month over month and year over year real estate market here in Lakewood Ranch, as well as take a look at a little bit longer term perspective to see how it all shapes out. So, if you've seen this before, there's color coding here. Basically, excuse me, we're looking at 9 different vital signs of the market, 9 different metrics here. If the metric moved in favor of buyers, it's coded in red. If it moved in favor of sellers, it is coded in green. And for the third straight month, there is more green than red. So we'll talk about that. We'll dissect it a little bit, but let's get right in. Biggest mover of the month, new listings, essentially falling off a cliff, down 25%. That's right, 25% less homes hit the market in November than in October. It's been a upward trajectory for many months before that. So good to see, if you're a seller, it's good to see less competition coming to market. For the eighth straight month, inventory is down, this time by 7.7%. Total of 673 properties on the market in Lakewood Ranch as of December 1st. Biggest mover for the buyer favoring metrics, or movers, I should say, is purchase activity, both in new purchase contracts and closed sales, both down about 6%. And for closed sales, that's 2 straight months of falling closed sales, which is kind of surprising because if you look at October purchase contracts, they were up up 17.5%. So to see contracts, which is a leading measure to closings, go up and closings go down, to me tells me one thing, and that is contract fallout, which has low-key been the biggest story from a professional's opinion of the 2025 real estate market. So must have seen some pretty high fallout numbers in the month of November. Another factor there is because of all the new construction, some of the contracts that are written don't close for several months. It's not always a 30-day cycle there. So, average and median days on market are split this month, with average up 1.2%, median down 3.6%. It is worth noting it's the third straight month of median days on market on the decline. Prices up, average price. Let's talk average price first, and let me caveat this by saying this only measures what closes in each of these particular months. It's not necessarily indicative of overall values across the board. But for the third straight month, the average closing price is up, this time by 5.3%. The median closed price is up for the second straight month by 3.2%. And then lastly, what I call the leverage factor, which is median sold price to list price ratio, measured by the final list price before it goes under contract, not the initial list price if it needs to be reduced. That is up 3.3% after a 2.9% drop last month, so just making up that lost ground. Now, what does this look like year over year? So let me get to Lakewood Ranch here. About a 50-50 split between buyer favoring and seller favoring metrics. This, of course, measures November of this year versus November of last year. This isn't any sort of year-to-date thing here. So in terms of seller favoring metrics, new listings down, we'll just call it a third, 33%. Median days on market down 19% year over year. Average down 3.5%. New purchase contracts, while down month over month, they are up by 4.3% this month compared to last year. Closed sales, on the other hand, down 10%, which it's not a big market, so we're not talking about huge raw numbers. Closed sales dropped by 16 total, but that is good for a 10% drop. Now, interestingly, while we've seen this run up in average and median close prices, they're both down year over year. That with the average down 1%, the median down 0.4%. And also the leverage factor is down 0.6%. So that's what year over year looks like. And let's take a look at it just on a little bit more longer, I don't want to say it's super long-term perspective, but since February of 2024 is when I started keeping these here. Average and median days on market, you can see the upward trajectory here, although with some ebbs and flows. And watch that median days on market. It is creeping back down into late 2024 territory as we're experiencing, two things. One, overall lower mortgage rates this quarter, and two, these builder incentives are just off the charts. Okay, new listings. This one's a little bit more complex. So you have 3 metrics on one graph, and I do that on purpose. Available homes, I didn't start keeping track of that till January this year, but that's in the red. Total availability, you can see shot up in March of this year and then has just steadily come down each and every month, really. But the yellow line indicates new purchase contracts, and the bigger the gap between the yellow and the red, as a seller, the slower the market is going to feel to you. Because if the yellow kind of hovers in the 170 to 250-ish range, we'll call it 240. So if there's only 200 homes going to contract and there's 900 on the market, then yeah, it's going to feel slow. Well, only 1 out of 5 is selling. It's so important, it's critical, in fact, to position yourself as a seller as the no-brainer option amongst your competition, or else you're going to be stuck in this void between what's on the market and what's actually selling. The blue indicates the number of new listings that came to the market that month. So all those are, except for the red, blue and the yellow are relatively flat during this time period. Closed sales, ups and downs. If you read the news, you'd figure this number is at 0, but there are, again, 150 to 240 homes closing every single month. There's always going to be seasonality to it. Average median price. Average in the blue, median in the red. You can see over the course of this almost 2 years, it's relatively flat. No real, huge movements in either direction. And then finally, the median sold price to list price ratio, what I called the leverage factor earlier, been on a downward trajectory, yet shot up again a pretty healthy amount last month. And we can dig into that to figure out why or what exactly caused that. And we'll watch that as we continue to watch how these trends unfold. So there you have it, month over month, year over year, a little bit longer term perspective on the Lakewood Ranch real estate market. Now this is Lakewood Ranch wide, so if you're looking for something that's more specific to, let's say, your village or your even street, drop a comment. Happy to prepare numbers like this for you. And really the best way to use this data, if you do plan on making a move, make sure you align yourself with a professional or a team of professionals that understands this data and can help you use it to your advantage. So there you have it, last Lakewood Ranch market in a minute for the year 2025. Happy holidays, Merry Christmas, and we'll see you again in 2026. Thanks for watching.